You're with us here on a fresh new edition of Midcap Radar, 1:30 p.m. The market is sideways. 10 points on the Nifty, 43 odd points on the Sensex is what we have on the downside. I mean, for the week, I think even if the market ends up around these levels by 3:30, would be up about 0.5% or so on the Nifty. And I think the situation for the mid-cap and small-cap indices would be far better. The mid-cap index at current levels for the week would end up almost 2%. And I think the small-cap index should be somewhere similar. Actually, the small-cap index will be up almost 2.6, 2.7% week to date, assuming that we close off around these levels. I mean, so the story really has been the pickup in the broader market that we've seen this week. Of course, fingers crossed and hoping that this kind of continues. Otherwise, Rima, it's gotten pretty boring tracking just about 6 or 7 stocks, right, on the Nifty.
Absolutely.
You need some action in the broader market.
You know, the Nifty's moved in a 40-point range today. That is 0.4%. So that's how sideways it is. But on the broader markets, we're up for the 4th day in a row. The advanced decline ratio has been positive. And if we manage to close where we are and we have that weekly gain of 2%, as Prashant was telling us, it would come on the back of 5 consecutive negative weekly closes on the mid-cap index. So it's been a huge, long stretch of weakness at the broader markets. And now we seem to be, at least for the near term, putting that behind us. Let's get in the early rates from the European markets and see if there's any signs of life over there which can infuse some energy in our own markets. Doesn't look like. Absolutely flat on the FTSE and the DAX and the CAC as well, just down about 5 points. I don't think the European markets are going to be moving us anytime soon. Let's hope the last 2 hours of trade see some excitement and movement. Let's run you through all the top headlines then. The markets see range-bound trade in the last day of the week. The Sensex and the Nifty are off the day's low but trading flat. Reliance and select private financial are the key draggers, while oil marketing companies and Yes Bank lead.
Mid-caps and small-cap stocks outperform for the 3rd straight day. Broader market indices set to close the week with 2% gains each.
Kotak Mahindra Bank is the top loser on the Nifty, stock under pressure after nearly 3% equity changes hands in multiple block deals. CNBC TV 18 learns ING may have sold its stake.
Debt market experts say that the size of the loans against shares problem is not big enough to be systemic in nature, but more rules are needed from SEBI and RBI on disclosure by mutual funds as regards to their exposure. So that is the word coming in on that important issue.
Prime Minister Narendra Modi is all set to formally launch the Pradhan Mantri Kisan Samman Nidhi scheme from Gorakhpur on the 24th of February. Sources tell CNBC TV 18 that the first tranche of money to 1.2 crore farmers will be transferred on Sunday. Okay, so those are the headlines. Let's look at the market and get some opinion as always. Ashwini is with us. Ashwini, good afternoon. First, broadly, what's your sense? Are we headed somewhere today at least?
See, basically, this is not a weak market because 10,800 was still where we went, 10,805 or something. And from there, the pullbacks have not been very sharp, hardly 20 points. So it's possible that, you could have a bit of short covering in the last hour, because if you're a bear, you are not comfortable with this 20-point decline. And sooner or later, I think we should break on the upside. Plus, we have, index which is very narrow range. You have mid caps which are moving higher. Even in this corrective market, advanced decline is fairly good. So, having said all that, I think carrying long positions into next week also may not be such a bad idea. Today, it's also about, the bank Nifty. Had it performed better, you would have gone past 10,800. So that way, the market is still looking strong and should be bought into. Having said that, IRB Infra is a buy with a stop of 124, target of 136. PVR is a buy with a stop of 1470, target of 1540. And Yes Bank is a buy with a stop of 215, target of 232.
Ashwini, what's the chart of ITC telling you? That's lost about 2.5% this week.
See, ITC basically is a range-bound type counter, and at the lower end you have 265, 270, higher end 290, 295. Overall, FMCG has done well today because there is this farm income, etc., which is going to be distributed, but nothing significant on ITC. Very narrow range stock, and 270 to about 290 on the upside.
Okay, so that's what's the view coming in from Ashwini at this point. Ashwini, before we let you go, just one quick point: the surge that we're seeing, late week surge on Yes Bank. Any thoughts here? Any trade now?
Well, Yes Bank is a buy, and 180 to about 220. That seems to be the range. Either you can buy around 180, or as we are getting past this 220 zone, basically the stock is again range bound and on declines now should be bought.
Ashwini, any disclosures on ITC and Yes Bank?
No disclosure on ITC or Yes Bank, but we have March calls of Nifty 10,700. So another big move, and you'll be ready to take some off around 10,900, 950.
Thank you very much for joining in. Let's get you some market opinion then. Gautam Chowcharia of UBS Securities says that the farm scheme announced by the government in its interim budget looks benign, adds that the market is well anchored towards a BJP-led coalition scenario in the upcoming elections.
This scheme looks like it will be rolled out with a lot of seriousness in Uttar Pradesh. And the maths of Uttar Pradesh, if you look at the number of votes cast in 14, including for the BJP, and the number of farmers being targeted and the land records digitally available, suggests that this is meaningful. Now, whether the farmer actually votes based on this scheme or not is up for debate. But the scheme is for real, and this is a wild card definitely for Mr. Modi, definitely in Uttar Pradesh and possibly in other states. This scheme is a wild card. And that's the thing which we have been pointing to investors, that this is the thing which will track for the next 15 days to 30 days, that if this gets traction at a local level, this could be similar to what we saw in Uttar Pradesh ahead of the assembly elections, where suddenly the narrative changed at the last minute. The markets are clearly anchored around the second scenario, which is BJP-led coalition. The only difference being 6 months back, the market's expectations were a stronger coalition. Now the anchoring is more around a weaker coalition, maybe around BJP at 200 odd seats, and then a weak coalition right now versus 220, 230 earlier for BJP. That's where the markets are anchored around. But in investor discussions, the probability of Mr. Modi not coming back through a coalition was near zero 6 months, 1 year back. Now there is some probability being assigned. Still a low probability, but still some probability being assigned. Whether fiscal goes for a toss or not, we will see post-election after the new budget is presented, but at least the budget presented for FY20 by the current finance minister, our government, is definitely aggressive on the revenue assumptions. But one thing is clear: whichever government comes to power in June, the fiscal space left to drive sustainable economic activity through capex or infrastructure is just not there. Whether fiscal deficit goes up, remains in control, but any government which comes in, given the pre-election promises of support to rural India, either through farm loan waiver, minimum income support scheme, 6,000 rupees scheme, whatever, there will not be any fiscal space left, at least for the first year, to drive any sustainable economic activity.
Okay, no fiscal space available to drive any sustainable economic activity, at least in the near term. That's the opinion coming in from UBS. But here's a note for all you viewers. The new rules for D2H and cable have come into effect, and you can now choose the channels that you want to watch, and you need to do it by the 31st of March. So if you want to keep watching India's #1 English business news channel, that's CNBC TV 18, call your cable or D2H operator and ask for CNBC TV 18 only for 4 rupees per month. We've got the management of Dilip Bilkon joining in. Rohan Suryavanshi, who's the head of strategy and planning at the company, joins in now. Rohan, we'd spoken a couple of days ago on numbers. Today, we actually want to talk about NHAI's targets for the full year. Now, they had set out a road, for the roads business, that they will award, worth 15,000 kilometers in FY19. But up until now, they've awarded projects of length only 2,355 kilometers. Which is what, less than 20%. What should we expect till the end of the year? And what is the reason for NHAI, falling so short of what their initial estimates were?
Hi, first of all, thank you for having me on your show. So, as you rightly pointed out, the national government had a target of about 15,000 kilometers that they wanted to award. Now, obviously, they've been far behind that target. But what is heartening to see is that as of now, as we speak today, about 1,20,000 crores of orders have already been bid out, have been put out for bidding. So what this means is the majority land acquisition for these projects has already happened. Now, given that there is a very small time left before the model code of conduct of elections kicks in, I don't know what percentage of projects will be awarded out. But even let's say they don't all get awarded out right now before the the term of this government. Whatever government comes to power next time, they will still have all these projects where the government has already spent half the money in terms of land acquisition. So this is an order book which will for sure happen. Now, what is also heartening is that all construction companies right now have at least a 2.5 to 3.5 year order, future order book already in hand. So they already have a good visibility of orders that the companies already have. On top of that, the government has already floated almost this 1,20,000 crores of bids. So we find enough comfort that there is visibility till 2022 right now. Now, why this has happened is even if you look at the last year, majority of the ordering happened in the last quarter, in fact, in the last month of the last financial year. So it is very similar that's happening this year as well. Only problem is this time we have much less time because of the code of conduct kicking in.
Rohan, just a couple of points. This 1,20,000 crores that you said for which bids have already been floated, can you sort of tell us in kilometer, just to compare it in terms of kilometers, what is that? How many kilometers worth of ordering is that?
I don't have the exact number in terms of the kilometers right now, but if you'll think about it, the total ordering that was given out last year also was somewhere in this range, a little over this range, the total kilometers of roads that were awarded. So I would guess that the number is quite close to that, even if it might not be the same, but it will still be a pretty decent number.
So this will obviously come through in F5. I mean, obviously it won't come in F5 19, as you said, because time is less, especially because of elections. Over the next year and maybe the year after that, one would imagine, because FY 20 will also have the impact of elections, the new government settling and things like that.
No, not really. So yes, some portion of the projects will come in this financial year. But the other portion of projects will come in FY20 because the new government doesn't have to do. See, the process, these bids are only floated when majority of the land has been acquired, which means the bids are ready, the road construction can start soon. So any government which comes in will obviously want to kickstart this process as well. You don't want to waste the money that you already put on these projects in terms of land acquisition and then let this languish. So I'm very sure the good part for any next government to come in will be that they will already get this served on a platter. So they wouldn't have to worry too much about doing anything else. Clearances, everything will be in place. So FY20, all of them and would be bidded out, if not right now. So I would expect in the second half of FY20, like by August, September, when the government would also have settled, the majority of these bids will be floated out. And on top of that, there are also other projects for which DPRs are ready and the land acquisition process has started. But they will only be floated when the land acquisition has reached a certain milestone. So, there is a good pipeline that we can see ahead of us.
Is the banking system a bit more apprehensive with the construction and infrastructure companies after the recent IL&FS fiasco?
So actually, let me give you some data. Number one, if you look at FY13, the national government awarded about 1,900 kilometers of roads. In FY18, that was about 17,000 kilometers of roads, which is a 9x increase in the total kilometers of roads which were awarded. At the same time, what's happened is, because this sector was largely funded by the public sector banks, we've seen half of the public sector banks in PCA. So obviously, there is, while the order book has increased, the banking system has been reducing. And on top of that, we had one-off events such as an IL&FS, which obviously impacts sentiment. So yes, there have been challenges in terms of, the overall sentiment. But largely, all players have, secured funding even for their HAM projects where they needed the banks to support along with the government funding. So all the large players that I know of in the public listed space have secured funding for all their HAM projects, and even some of the smaller ones have secured. So majority of the HAM projects have either been funded or are in the final stages of funding. So that is one thing. On for regular working capital and other things, yes, there are challenges in those. The terms have become a bit more stringent, but I don't expect it to last for a very long time. This is just a negative sentiment that has been happening in the markets overall, and we've only seen over this year there should be more relaxation, and next year things should be better because the companies are performing pretty well. They have a very good order book with good margins.
Right. Rohan, just to come back to that land acquisition point, many companies we've spoken to have said that execution is lagging because land acquisition is a bit slow. You said for that 1,20,000, most of the land acquisition has been done. But in the case of hybrid projects, even after you have been, if for example Dilip Bilkon is given an order, land can be acquired even after that. It's not as if the entire land is acquired and then only the order is given out, right? So have we seen some delay in that? I mean, is the problem with land acquisition, or is the problem that to make to increase the pace of awarding orders, the process of the land acquisition was not given a priority? I mean, is it becoming more difficult to acquire land, or is it the other one?
No, actually it's not become more difficult to acquire land.
Okay.
See, I pointed out that, the order inflow from 5 years ago has gone almost 10 times up. It's 9 times up. Now, the problem here is that while the government has, done all of this, the whole system is also gearing up to do the quantum of work that has come out. Land acquisition being one of those things. So, there has been no delay in terms of, the government processes. In fact, it has improved. If you'll see, land acquisition process improved on all metrics from where it was 5 years ago. In terms of the compensation, it is far more generous. Farmers are getting awarded 4 times the circle rate. In terms of processes and timeline, it's far more efficient. The only thing is the quantum of work has increased. While the government does acquire a certain portion of land before they have to bid out a project, there is still some portion of land which is left and which is still in process before they actually give the appointed date.
Correct.
And we've also seen some delays happening in appointed dates because the total land has not been acquired, but it is more a function of the quantum of work that the government has undertaken right now, not because there are, procedural delays. So it's more to do with that. But even in that situation, when I look at if I talk about our situation as well, we've seen a delay of about a quarter or so. Now, in such a large portfolio and, with the quantum work that you're doing, I don't think it's a huge delay when I look at historical delays and historical numbers. So
Sure.
It's pretty much all right.
It's essentially the size of the work
it's the size of the work which has happened. And also, I think a lot of players, because they have such a huge order book,
Right.
even all of us wouldn't want to start all our orders right now. So
Okay.
even if, we are also looking at, letting the government give
Got
the
it.
whole land before we start work.
Got it. Rohan, thanks very much. Appreciate you joining in. Interesting chat there, and gives us some clarity in terms of what is happening. So the outlook is pretty bullish according to Dilip Bilkon. So the market is absolutely flat. There was some weakness at 130 that's kind of disappeared. 10,787 is where we're at. So just a couple of stocks before I take your leave. Take Solutions has gained more. It's recovered quite strongly from the recent lows, but just to put in perspective, it would be just a fraction of what it lost from the highs. Magma is the other one, which is doing well. GNA Axles, I pointed out earlier, which has been buzzing, and I think it's extended gains. And Motherson, which was up in the 4.5% region, is now up 6% plus. So those are a couple of buzzing stocks with volumes. It's a wrap here on this edition of Midcap Radar. Thanks very much for staying with us. There's more coming up on your stocks.